Ticker symbol DGRO, or the iShares Core Dividend Growth ETF, is definitely up there in the conversation as far as one of the best dividend growth ETFs across the entire stock market. Now in this video, we're going to dig deep into DGRO, see what this ETF has to offer, exactly how this ETF works. Then later on, I'm going to explain to you exactly how many shares of the iShares Core Dividend Growth ETF an investor would need to buy in order to retire. And just a hint, it's not as many shares as you might think. Now, if you consider yourself a dividend growth investor, make sure to stick around because you are definitely going to want to dig into DGRO if you love dividends and love dividend growth. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earn more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now heading over to the iShares website, even though I'm sure a lot of you guys are already pretty aware of what this ETF is and how it works, for those that might be a little bit newer here, why DGRO? It says DGRO offers low cost exposure to US stock focused on dividend growth. And if you've personally watched any of my videos before, you know how important I think the dividend growth rate is when building out a long-term dividend portfolio, because basically when you invest into a stock or ETF that offers a decent or even high dividend growth rate, you're going to most likely get paid more and more in dividends year over year for doing absolutely nothing but holding on to the underlying assets. Now, another side note on dividend growth is very, very important if you do happen to be an investor that doesn't have all that much money to invest. Because with a stock or ETF in this case, dividend growth is going to supercharge your portfolio without doing absolutely anything. Number 2, it says DGRO access companies that have a history of sustained dividend growth and that are broadly diversified across industries. So over time, as you build out a larger and larger dividend growth portfolio, diversification is going to be something you are most likely going to be very concerned with, because over time, as your investments grow, you're going to want some heavy diversification in order to sleep well at night and know that your portfolio is going to be just fine pretty much no matter what. Now, number 3 with DGRO, it says use the core of your portfolio to seek income. Now, looking at DGRO's performance, since around June of 2014, this ETF's performance has been very, very well as far as price return goes, up around 115%, not even including dividends. Now, during 2020, there was a pretty decent drop along with everything else in the market. DGRO dropped from around $41 per share down to around $29 per share, but since then, DGRO has been on the up and up, and basically as of recently trading at all-time highs. Now, the fact that DGRO is trading pretty close to all-time highs, for me personally, as a long-term 31-year-old dividend growth investor, this ETF still offers a buying opportunity because, again, historically speaking, at least this ETF has traded quite well up and to the right, and I definitely have good reason to believe that it will continue to do so. Now, one of the aspects of DGRO that some long-term dividend growth investors might not be all that fond of is the fact that DGRO does have a 0.08% expense ratio, which is a little bit more expensive than something like that of VOO or even SHD. But all in all, a 0.08% expense ratio isn't all that much to be upset about, especially when you see the total return that DGRO is offered long-term. Now, another massively important aspect when it comes to an ETF, of course, is the holding breakdowns, the different sectors, and the top 10 holdings, etc. So the cool thing about DGRO is that the top holdings are different stocks that offer, like we talked about earlier, decent dividends and dividend growth, but also some large price return potential because of these sectors. Things like financials, technology, and healthcare make up the top 3 sectors as of right now at around 18%. And then the rest of the ETF is made up of things like industrials, consumer defensive, etc., etc. Now, this is one of the main reasons on why I'm so fond of this ETF and why I plan on grabbing this ETF pretty consistently over, say, the next 5 years, for not only a dividend income, dividend growth, but also mostly for some massive price return long term. Because this ETF's top holdings are things like Microsoft, JP Morgan, Johnson & Johnson, some high quality dividend payers like Broadcom, abbvie, ExxonMobil, then also some growth monsters like Apple, Chevron, Home Depot, Procter & Gamble. And all in all, 400 or so different holdings are within DGRO, which is super diversified, much more than that of even comparing DGRO to something like SHD, which I love, especially as I've been growing my portfolios larger and larger over the past few years, where now some of my portfolios are really starting to get up there. Diversification is more important than ever because I definitely do not want to put all my eggs in one basket. Now, DGRO's dividend yield, let's talk about it. The trailing 12 month is around 2.4, 2.5%, which again, isn't the highest dividend yield in the world. Obviously, there's tons of different stocks and ETFs out there that could offer you a starting yield much higher, but the dividend growth rate is significant at 12.67% on the trailing 12-month time frame, which is pretty significant considering, and goes back to what I said earlier, especially for investors that don't have all that much money to invest. A dividend growth rate this high is really going to boost your income throughout the portfolio long term. Now, zooming out to 2014, you can see that DGRO's dividend growth has been pretty significant. And although at times it's stagnated a little bit, over the past few years, especially the last few quarters, DGRO is paying massive dividends and will hopefully continue to do so. Now, to figure out how many shares of ticker symbol DGRO an investor will need to buy in order to retire off either the dividend or just the principal, this is of course going to have to depend on each individual investor's expenses, etc. But to give one pretty realistic example here, with a starting investment of around $20,000 into an ETF like DGRO, with an initial annual dividend yield of around 2.5%, an expected annual dividend amount increase of around 10%. Now keep in mind, even though DGRO has raised their dividend year over year above 10% at times, it's also been less, but let's just use 10% as a prediction and see what we get. Now, on top of the $20,000 starting in DGRO, we are also going to be having a $12,000 annual contribution with this specific example, and then also dividend reinvestment is going to be turned on. Now, the time frame with this example is going to be 30 years. Keep in mind, if you're younger, you might have a longer time frame ahead of you. If you're a little bit older, maybe a little bit less. Again, this is just one example. I definitely implore all of you guys to mess around with some of these dividend calculators. They are a ton of fun and can also give you an idea of what you can look forward to in the future. Now, the numbers are in when it comes to ticker symbol DGRO. A $20,000 investment would earn around $500 per year in dividends, year number one, but after that, annual contribution kicks in, and on top of those dividends being reinvested, by year number two, we're already up to $33,000 of principal and almost $891 per year in dividends. Now, for an investor to really get up there as far as principal or dividends go, I would say it'd probably take around 15 to 20 years if we were to go off those numbers again, off that $20,000 investment plus $12,000 more or less per year. Now, keep in mind, if an investor bought more DGRO off the bat or less DGRO off the bat, it's going to change things quite a bit. But by year number 12, 13, this investor would have almost $250,000 worth of principal already, just off that $20K and $12K per year, and almost $12,000 per year in dividends. Now, by about 17, 18, 19 years in, if this investor stayed the course, which a lot of investors out there do, an investor would have around $400,000, $500,000 in principal and around $30,000 to $40,000 per year in dividends. Now, depending on an investor's expenses, this is sort of starting to get into that range where this is definitely someone's full-time salary, which now just from an investment of $20,000 into DGRO, an investor is now earning this per year in dividends. Now, from year number 20 to 30, this investor is going to see a massive increase in not only principal, but also dividends. We're talking year number 21, $638,000 of principal and $61,000 per year in dividends. And if an investor was to continue to reinvest all those juicy dividends from year number 20 to 30, you can see the numbers get bigger and bigger, and the dividends really start to skyrocket. Now, like I said, to know exactly how long it would take for an investor to retire off the dividends or principal, or maybe both, it's going to depend on every investor's different situation. But one thing's for certain, and this proves that buying into something like DGRO that offers nice price return historically, a decent size starting dividend, and mega dividend growth, at least over the last year time frame, an investor could definitely turn a relatively small amount of money into a massive income generating asset if they just stayed the course and invested long enough. But when it comes to ticker symbol DGRO, the iShares Core Dividend Growth ETF, now I want to hear from you guys down below. Is this ETF personally in your portfolio? Or when it comes to dividend growth ETFs, what is your number one buy and hold forever ETF of your choice? Drop it in the comments down below. If you enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.